only 1% down, as low as a 620 credit score, no PMI requirements, available in all 50 states, conventional? Yeah, this ought to be interesting. This is JP from Blueprint for Prosperity. To all my pioneers out there, welcome back. To all my new viewers out there, welcome in. You want to continue to hear quality content on how to increase your net worth and customize your blueprint for prosperity? Like this video, subscribe to the channel. Let's get right into the content. So at the time of this recording, it's probably going to be about a couple weeks old. I'm recording it significantly sooner than it's going to come out. But there's a new conventional loan on the block in the housing market, in the mortgage market rather, that is only requiring 1% down, allowing down to 620 on the credit score requirements, and does not require PMI. That is fascinating. I am not going to steal the thunder on this video by claiming to break this news. I'm actually going to link the description down below from the YouTube channel that I follow that actually broke this first to my knowledge. And that is going to be When the House You Love. And the post there is Kyle. So I'm going to link that video in the description below so you can get a little bit more into the detail. I don't really want to dive as far into the loan as much as I want to talk about people's response to the loan and concerns around whether this is going to lead to another mortgage crisis in the near future. That is more what this video is about. Also encouraging you as to why I think this is an excellent opportunity for you to buy, even with the current interest rate situation, and my theory on how this is going to pay off for you down the line. So stay locked in. So again, 1% down, 620 minimum credit score, no PMI requirements, available in all 50 states, and no loan level price adjustments baked into this loan, meaning that it can be a very competitive interest rate. I am not sure the DTI requirements on this loan, but with it being conventional, my assessment is probably relatively flexible or somewhere in the 40% range at the very max back-end DTI. So with that on the table, there is one caveat. There are income limitations. It is 80% of the median area income. But again, it is all 50 states. There's going to be a link within the description of the video that I'm going to link that will actually give you the ability to go on and find out what the area median income is for the areas that you may be interested in buying. With all of that out of the way, where does this lead the mortgage market? Now that this product is rolled out and it's becoming a thing, what's the theory behind this, and where is this going to lead the mortgage market, and how is this likely going to benefit you if you can take advantage of it? The likelihood is that the government has demonstrated since COVID especially that they are determined to get people into homes and keep people into homes. That's the very first thing out of the gate. There's several different loan programs. There's modification programs for those struggling with payments since COVID. There's mortgage loan programs and a lot of down payment assistance money out there, various things on local, state, and federal levels. That's just basically kicking the door open to continue to entice people to buy homes, or at least try to keep people as many buyers in the market as possible from that perspective. That having been said, there's some valid concern that this loan is just not requiring enough from potential buyers, and that it's going to lead to a bunch of people underwater on their homes at a time that the mortgage market or the housing market from a price point of view could fail. This is my theory on this. I'm going to be completely blunt with you. I honestly think that the people who are in control of these decisions and rolling these programs out, and many of us that are watching this, are starting to realize that not only is a real estate crash in the residential market not looking very likely, but assuming that the Federal Reserve is able to navigate this the way that they intend, meaning that they're able to get inflation down to that 2% target range right before or really early into us being into a recession, meaning that they can get it done in time before a severe recession kicks in. If the Federal Reserve can pull that off, and let's just assume that they've paused rates for now, starting their next meeting, I believe is June 12th. So probably going to be right around the time of this recording dropping. If the Federal Reserve pauses and is able to get the inflation rate down to that 2% target goal with the existing terminal rate that's in place, which is, I believe, 5.25. If they're able to get that done, the likelihood is that mortgage rates will end up dropping significantly because the Fed funds rate is going to be coming down. inflation also will bring mortgage rates down. And to be honest, if the Federal Reserve does pause on June 12th, we can start to see mortgage rates come down anyway, prior to inflation coming down, prior to the federal funds rates coming down, because the market is going to start anticipating the Fed to taper off, pause, and potentially start to cut at some point. Now, if that goes into effect, that happens, then I can tell you right now, we're at the peak interest rates that we've been in since sometime last year, at around that 7% range at the time of this recording. And I can tell you right now, if the interest rates, mortgage rates start to come down anywhere near 6 or below 6, we're going to start to see pretty significant competition in more markets. Some markets are still hot as we speak, but there are going to be more markets around the country that are going to start to heat up. If we drop below 5.5, then you're going to see a more significant boost across the housing market across the United States. And if we drop below 5 in the next 6 to 12 months, it's going to be a feeding frenzy in the housing market. Even though many are still used to, those upper 2 to 3% rates, when you start to get below 5%, you're starting to get in a range where people can get their head around it, especially after seeing 7% rates so long. You're going to be almost cut in half at that point in time, or at least down a third or so. At that point in time, you're going to have the move up market, which is going to be people who own homes already looking to move into their next home or move up to a better quality home. That's going to start to unlock that and happen. And then you're going to have a bunch of first time home buyers and other buyers jumping into the market again. And the likelihood is there's going to be a massive demand for housing while we still have a massive inventory shortage. I shot a video about this maybe about a week ago. I'm telling you right now, I'm telling you all of this because mortgage products are starting to tailor around keeping people in homes. And I'm telling you that the federal funds rate, inflation are all likely to come down, dragging mortgage rates down with it. We still have a massive inventory shortage, people. We still have a very significant inventory shortage. So what that means is we're going to end up having more affordable, housing or more affordable mortgages, and a lot more people who can get off the sidelines now that were put on the sidelines in the last 6 to 9 months, 12 months, while we still have a shortage of homes. So all that having been said, believe it or not, the concern is, will there be a mortgage crisis down the line because there's such a low barrier to entry? My theory says probably not. And if you don't get into a home in the next 6 to 12 months, or maybe even 6 to 9 months, you may find it incredibly challenging to do, even though mortgages will be more affordable, because we have an inventory shortage still. And you're going to have magnitudes more buyers able to get back in the market once interest rates drop down another 0.5%, 4%, 1.5%. Many people who are sitting on the sideline that are not able to get into the homes they want due to these rates are going to be able to get in. And I can tell you right now, many home prices have not made significant declines. So if we're at these peak interest rates and mortgage and home values have not come down, seller demand of the price they're requiring has not tapered very much, what do you think is going to happen when more people can afford to buy again? It's going to be COVID 2.0. And I'm telling you right now, mortgage programs like this are going to be golden, because you'll hopefully be able to get in before all of this kicks into play. And you'll likely, depending on your housing market, you'll likely be very grateful you did, because I honestly think we're seeing the roughest declines in prices right now, maybe for the next 3 to 6 months. When interest rates start to significantly come down and stay down, I can tell you right now, housing prices are going to start to go back up by high single digits to double digits again. I'm telling you, it's going to happen, because there's nothing we can do about the inventory crisis going on right now. And the powers that be are going to want the housing market to stay functional, especially if the economy is slowing down, because housing and real estate is such a crucial part to our economy. So I can tell you right now, as long as inflation comes down, as long as the Federal Reserve wins that battle, the likelihood is in the next 6 to 12 months, we are going to see interest rates come down, and there's going to be a feeding frenzy in the housing market. this 1% conventional loan and other loans out there that are making it more possible for people to get in is going to be a gift to those who can take advantage of it. Because I assure you, 9 out of 10 times, housing prices are going to go back through the roof. They're not only not going to crash, they're not going to plateau out. They're going to start to go up high single digits, low double digits all over again, year after year for the foreseeable future, because we have not done anything about our inventory crisis. So I wanted to bring this to you because hopefully you're in position to take advantage of this loan. Hopefully it helps put you back in the game before the feeding frenzy kicks into play. I wanted to give you some specs. I'm going to drop that video down below of that other channel where I got this information from, so you can get more details on the loan specifically, because he does a great job in that video. I don't want to butcher it any further because I haven't done a lot of homework on that part. I wanted to bring you the more important perspective on how this can increase your net worth in the end if you can get in on it. So other than that, comment down below. Let me know what you think. Are you concerned about a mortgage crisis, given these different programs that are popping up? Or do you see it the way that I see it and some other, financial pundits out there see it, and think that 9 out of 10 times housing prices, especially single family homes, have a ways to go in their growth? Let me know your opinion down below. Other than that, if you want to support the channel, links in the description to some quality lenders down there that can get you some great referral bonuses on some credit cards, and also get you potentially some extra cash depending on which link you choose. So if you want to support the channel and get great welcome bonuses, you can do that as a win-win to support the channel. I thank you for doing so. To all my pioneers out there, I want you to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.